That is, Courtney, where you do have Wolf Research talking about tonight, financials being a big election winner, talking about the regional banks as well. Do you see that as a space if former President Trump is reelected tonight as president once again, that is a space to keep your eye on?
Yeah, regional banks specifically are one that are talked about often right now, because what you're seeing is in this administration, though they really haven't turned down a lot of M&A, it's so hard to get these through that there's pretty much no M&A activity, but that is expected to pick up in a Trump administration. So absolutely, that's something that you want to look at. If Trump were to be in office, that's probably going to start to take off here.
Scott Wapner and the panel discussed market positioning during a record-setting rally. Tom Lee emphasized tech's continued strength but highlighted opportunities in small caps and financials as market breadth expands. Courtney Gibson pointed out that regional banks could thrive under a Trump administration due to increased Manda activity. The discussion also touched on semiconductors, with Nvidia's inclusion in the Dow reflecting strong demand. However, concerns about election impacts, such as tariffs and regulatory scrutiny, remain significant. Josh Brown noted the tech sector's dispersion, suggesting stock pickers had a strong year with opportunities beyond the biggest names. Analysts highlighted broader market trends, including themes like AI, housing, and electrification. Regulatory overhangs in tech were noted, with potential impacts on companies like Google, Apple, and Meta depending on the election outcome.
We talked earlier, Tom, we kept it broad. We looked at the backdrop for this record-setting rally. Now let's talk about positioning, exactly where our viewers want to think about investing, no matter who wins. How can we talk about that without addressing tech, the trade of the year? You've been a big proponent of the Mag 7, obviously. What's your view now?
I think tech still works into year end, but with the election behind us, I do think investors are going to be looking for other areas on a bet that market breadth is expanding. And I think one place they'll turn to is, oh, well, where would animal spirits come back? Things that could benefit from mergers, or where are multiples low so I can see PE expansion. And that would take people to small caps, financials, basically the rest of the market, actually.
What about semis?
Yeah.
We mentioned Nvidia, it's, pushing Apple right there on the top of the market cap chain. It obviously has had an incredible run, but not every stock is in Nvidia in this market.
No.
How are you judging the semis?
This is the one place where I really think you've seen, and this has really been true all spring into the summer, into the fall, where you've seen leadership really fracture or split. We know how good the Nvidia chart is. We know how good Broadcom has been. Where's AMAT? Where's Lam Research? Where's ASML? Where's Samsung? It is, of what is perceived as leadership, I think it's the faultiest of that. It's the weakest under the surface. Only 25% of semis are actually above their 200-day moving average here. You do get some good seasonality with semis the next 4-6 weeks. I think if you got a bounce, I'd be more inclined to fade that bounce in semis than I would be chasing.
I asked you earlier about Berkshire selling Apple, so let me flip it and ask you about Nvidia now and the inclusion in the Dow and how you're thinking about that based on what you've seen through the years.
Yeah, I mean, obviously, on some level, the inclusion of Intel previously and not having a play on Nvidia, which is 7% of the S&P 500, probably just made the Dow feel a little bit unrepresentative of the economy right now. Now, you could definitely make the case that it's just grabbing onto a high momentum play way after the fact, after its greatest gains. I was just looking at the Nvidia versus Apple equation in terms of, market cap neck and neck right now. Well, Nvidia has about a third of the revenue in the coming year and about half the net income. So you could obviously say it's a more expensive stock, but it's growing so much more quickly. So in the short term, first of all, there's no brand new reason to buy a stock because it's in the Dow. History says that's not at all a reason to buy. There's not a lot of money indexed to the Dow. It's much more about, the way that it's validating its current role in the new tech economy, which we sort of knew already. So again, I don't think it's a sell the news. Maybe it's a buy because of the capitulation on Intel. But at this point, it seems much more about the Dow trying to stay relevant.
All right, good stuff.
The NASDAQ coming off its worst week since September after a slew of reports from big tech. Our Seema Modi's been tracking some of that action. Hey, Seema.
Hey, Carl. And semiconductors specifically trying to make up ground after losing over $360 billion in market cap last week. Nvidia, the biggest laggard, though, rebounding today as we await its inclusion into the Dow this Friday. Separately, South Korean memory chip supplier SK Hynix has been asked by Nvidia to pull forward production of its next generation memory product. It's seen as yet another data point that reiterates highlights the strong demand for Nvidia's graphic processing units. This as a growing number of analysts are voicing their concern around the broader impact of the election on the chip sector. B of A calculating the impact of a higher tax rate if Vice President Harris wins and says it would be a long-term negative for Nvidia and others like Texas Instruments and Qualcomm, which reports earnings this week. The biggest potential challenge, according to B of A, though, is the prospect of tariffs under former President Trump, which would challenge the sector, increase costs for memory and equipment players. For reference, the chip sector outperformed the S&P on average by 51% under a Democrat in office, 38% under a Republican. Tonight, we get two big earnings reports, there's NXPI and Lattice Semiconductor, followed by a crucial business update from Supermicro, which comes tomorrow. Guys?
Final trades, Josh.
Sticking with Uber.
Okay, Bryn?
Mine's Uber, too. Market gets it wrong all the time.
Oh, okay. Farmer Jim.
Hit the easy button. Buy Nvidia.
Laugh track.
I don't know what to say. Meta platform, stay with it.
On the idea, Adam, of tech, I want to read you something that the Wedbush analyst Dan Ives, familiar to all of our viewers, of course, on the possibility of a Trump win and what that would mean for that space. A major change in tariffs, he says, and a harsher stance on China, we believe, would significantly impact the supply chain. Nvidia, Beijing, retaliatory impacts on Apple and Tesla are likely and slow the pace of the AI revolution. Is he onto something or not?
Look, I think investors are positioned in 5 or 6 growth themes independent of the election. AI semis is one of them. If he's talking about some short-term supply disruption, he could be right. But I think if you're investing money, you want to own compute and anything associated with it. You want to own software around that. There's electrification industrials, there's housing building materials, there's power. There's so many themes that are in place, and I think people are positioned to own those themes. I'd also say within tech, there's a little bit of this misnomer. Because the market cap of big tech is so big, you have to own it to keep up with the S&P. But if you look at the dispersion in the group, I mean, there's tons of stocks that are up or down a lot this year. It's Palantir's up 198, Dell's up 75, FICO's up 73, GoDaddy 50. I mean, there's tons of dispersion. Intel's down 55. You could have picked stock this year pretty well. It wasn't just the Mag 7 that worked. I think it's a little bit of an excuse because it's hard to beat the S&P when they're so big. But I think stock pickers had a very good year in tech, generally given the dispersion.
You have regulatory issues to think about, do you not, Josh? Under a potential Harris administration, the Biden administration hasn't exactly been friendly and embracing of big tech. Google, Apple, Amazon, Meta, all facing some sort of actions or threats.
Yeah, and they're facing those threats not just in the United States, but all over the world. And I think that overhang remains regardless. In a typical election, you would guess that big business would be aided by the Republican candidate. And certainly, if Donald Trump comes in, we're probably saying goodbye to the head of the SEC, the head of the FTC. That seems likely. But Donald Trump's not a big fan of Google. There's complaints tonight all over social media about the way search seems to be favoring the Harris side. You're going to hear so much rhetoric about these platforms and whether or not they're against Trump. We've seen that in the past with Facebook, back when it was called Facebook. So my take is don't overthink it. Look at what's already rallying as the needle leans toward Trump. You've got Bitcoin up 5%, HOD, actually a November high. You've got the Russell 2000 futures up 2.5%. It's a notable move given there's not that much volume there. And by the way, Courtney, I completely agree with you. You can't say regional banks are going to rally and not think the Russell's going to work. That's basically synonymous trade. And then Tesla up 7% after hours. Those are probably the things that will have longevity if the result goes toward Trump. If it goes toward Harris, we have to start talking once again about antitrust and breaking up platforms, and it's another 4 years of that.
The discussion emphasized tech's dominance while encouraging diversification into sectors like small caps and financials amid expanding market breadth. Election outcomes could significantly impact regulations, supply chains, and market themes, highlighting the need for strategic positioning. Panelists stressed focusing on long-term themes like AI and electrification while navigating mixed performance in tech. Investors were urged to stay adaptable to political and market shift. How might election outcomes influence your investment approach? Are you exploring opportunities outside tech, like small caps or financials?